Good afternoon, everybody. Welcome to Trader Merlin Show, and happy St. Patrick's Day. Hope you all green. The luck of the Irish, apparently, over our markets today. Before we get started, big shout out to my friend Mike McMahon, whose birthday is today. Always good having a birthday on St. Patrick's Day. So, Mike, if you're watching, cheers to you, and cheers to all of you. I don't have anything to cheers you with. I guess I should have a green beer or something on the program, although I'm still under the weather, so struggling away. We'll make it work. Anyway, let's dive into what's happening for our markets today. Jubilation abound as we have a second green day in a row. Riddle me this, folks. I know a lot of you guys stumble in here late as I get rolling with this show, but for those of you who did join us here early, I appreciate it. Kenny, and we got Future Trader, Chio, Big Ab, of course, John G, we got Lori, Liz, Saba, MTV, and Les. Trivia question for you. When was the last time we had 2 up days in the S&P 500? You know, it's one of those things you just kind of take for granted, but, you know, over the past month or so, it's just been this consistently down market, which, you know, has been good opportunity. I've had a couple of trades that went against me, but for the most part, it was, all in all, great slide for me. So, Saba says 17 days. Good to see you, Jimmy, and Chris as well. Happy St. Patrick's Day, my friend. I guess I should do it with a little bit of an Irish accent here. Happy St. Patrick's Day, everyone. It's been 1 month. Exactly 1 month. So, I'll bring up the chart here of the S&P 500. We'll go look at the futures, just so we can have that one on there. And as I zoom in over the last 30 days or so, you can see we had a green candle on the 12th, but that was single. The only time we've had 2 in a row, actually we're 4 in a row, was back here from February 13th through February 19th. So that was our last kind of 2 up days in a row. Kind of sad. Sad that it's been that long. It seems like so long ago. Now, I guess the big question for everyone here is, what does this mean, right? What is this euphoric bounce that everyone's so excited about? Is this simply a bounce in the greater context of a downtrend that started over a month ago? Or is this just the now beginning of a new uptrend piece? And only time will tell. Only time will tell how that ultimately turns out, but right now it does feel kind of a little luck of the Irish there, you know, and the markets, I was having fun with some graphics programs this morning. The markets, you feel like this, like everyone's just cheering and celebrating. When I look at this price chart, though, I believe it goes back to, I'm not calling it a premonition, it's just analysis of what markets typically do, especially when you have an aggressive down move. We mentioned that they typically bounce. And, you know, I had a bounce forecasted to come back up to this area of supply between 57.25 and 57.60. I still believe that holds true. I still think we're probably going to get another, maybe a positive day here. I think we'll talk about Nvidia here in just a second. But within the next couple of days, maybe this week, we get another 1% higher, enter into that zone. 1% from current levels would take us to right around 57.38 on the S&P. And then from there, then the real decision happens. Like, does it actually break through this and start to move to the upside, or do we get a continuation sell-off? A wagering man, as I tend to be, I would put my chips in line for a retracement up to that supply zone, which I've drawn out and mentioned already for the podcasters. Again, thanks to all the podcasters that listen. And then I do believe we'll get that next leg down. I think that there's just too much pessimism. There's too much uncertainty and chaos with tariffs and now infighting between political parties. Well, more infighting between political parties, and now the justice system is kind of going after Trump and the administration. It's just a little bit messy here. So I'm going to keep this on the screen because I do believe that this is kind of where we'll be headed. I don't know if this is necessarily the low point. I just do believe that we are going to rally up into that supply zone and then start drifting lower and ultimately break down below this low we saw on the 13th, which was last Thursday. That low point on the S&P 500 was 5,509. So get below that. Then you notice we've got a couple other pretty significant turning points that happened back in September of last year, and also a bigger one down that happened in August. So exciting times, because it does feel like we're starting to see a complete reversal of trend. And in my opinion, this is where you separate the traders from the experts. And it was funny, my friend Gary, who I spent many years with video production at Trading Academy and just a great guy, he sends me all kinds of quirky stuff. And he sent me this video of this guy who's got a trading school, and, oh, I made $500,000 yesterday, and I made $600,000 the day before, and I made $1.7 million the week before. It's like, no, you didn't. You're lying through your teeth. And most people tend to do really well in bullish markets. We've had this conversation several times, and most people, because it's a buy and hold mentality, markets do go up over time. That's a fact. Most people will make money when markets move up. And when you have pullbacks like we had from December of 2021 all the way through October of 2022, I mean, that was 10 months of sell-off. And I'm sure a lot of people were freaking out because a long-term account was falling and all those little social media experts, as this guy claims to be, making millions of dollars a day trading, right? I'd like to see the actual trade statements, pal. But if this does in fact start to form a new downtrend, then our show discussions are going to shift completely. Now it's about finding which ones look the weakest and shorting those. Looking for retracements into supply zones on pullbacks to the upside for shorting opportunities until the market doesn't give us those opportunities. But we're not there yet, right? I think I've mentioned this before. I do believe that this is a shot across the bow that says the uptrend that was in place before is no longer. That's done. Now it's a question of, do we channel sideways and start a slightly less steep run to the upside, or is it broken and now people start taking profits? And that's the multi-million-dollar question we all have to figure out for ourselves and how we position ourselves with regards to our accounts. He's not a trader, he's a liar. Yeah, probably. I was going to send the video. I was going to actually show the video clip on here, but again, I just don't think that these people deserve to get any extra publicity than they're already getting. Because look, let's say hypothetically I started my own trading school. I'm going to be honest, upfront, forthcoming about the realities of trading, which are trading's difficult. It's not all green and roses and everything's just fantastic. There's down days, there's stress, there's all kinds of internal dialogue and drama that goes on, and you have to deal with all that stuff. And I'm not making $500,000 days or $100,000 days. I've had them, and they're far and few between, and those are the ones that you just, you feel like you got lucky those days. But when you have people bragging and boasting, two separate ads, right? You got mine, which is like, hey, let's learn how to trade and invest the right way. Make sure you can, learn a skill set that'll last you the rest of your life. Da-da-da. Or, man, I made $500,000 today. Which class are you going to click on? The vast majority of people are going to go click on that guy's ad. And unfortunately, regulators don't do anything about it because I'll bet dollars to donuts that guy's lying through his teeth. He's got no skin in the game. He's probably using a simulator and using multiple accounts so he can track each of those accounts in simulator and say, I made all this money when he hasn't made a damn penny. We'll probably move sideways and slowly grind down. I'm of that belief as well, Steve. I think that if you look at the way we've moved over the past month, right, that was to me a knee-jerk reaction, aggressive. And that's why I'm really so curious about this next move. Because if we do come up and retest that supply zone and it holds, then I think you'll get that slow grind down. I think you'll get the slow grind. If we do get to that 20% mark, which I have mapped out on the screen here, I believe that this is that 20% mark. Let me make sure, 100% sure here. Yes, 20% should put us down around 49.26. I'll get the exact numbers for you, but 49.26 would be 20% off the all-time high. That's another big bounce point. And the reason for that, of course, is psychology of the media. If we get below 49.26, then I think you guys really need to think about a much bigger downside move. Could that 20 turn into a 50? It'd be hard to believe that it could fall that much, but stranger things have happened, and like I say, the trend is your friend till they bend at the end. So it's our job right now just to kind of listen to the markets. Don't get so hung up on the data. The data will kind of drive this, but again, that data can be cooked. RTY at 20% last Thursday. We go look at that RTY futures. Yeah, RTY is, that's the canary in the coal mine, right? We can go down to that all-time low there, and you had 19.22. I'll probably can get to the tails here and stretch this to a 20. But yeah, you had that 20% pullback there. Again, markets don't focus on this one, right? As traders, you want to focus on what the masses are focusing on. And the most retail people, and I'm pretty sure Steve, Margaret, and Saba, all you guys out there, if you went to your associates, your friends who are not as into the markets as you are and said, oh, the Russell's down 20%, they're probably going to go, did Russell call in sick today? I don't know. Is Russell, what Russell do you mean, right? Most people don't know the Russell 2000, right? That's kind of, once you get into trading, you realize that the Russell is an important piece. It's small caps, but the market is the S&P. Now, on the flip side of this, we could go look at the Dow Jones Industrial Average, which has been doing much better. I actually have to go back. I'll do it from the all-time high, which is back on December 4th, to its low point, 9.97. So a little bit better than the S&P because the S&P breached 10%. But yes, we are seeing pretty significant pullbacks, but the real proverbial doo-doo will hit the fan when we get this S&P down to 20%. Yeah, most widely known. Correct. Let's see. Too much fear in the market. Sellers will step in again. I think so. I think that the fear mongering by the media is what's going to push this higher. And it's not just the fear mongering of the market. It's the fear mongering of the president, of just everything, all the changes right now. So just got to ride that, right? If people are nervous about it, they're going to go to cash. Like I think I told you guys last week, a friend of mine, is a completely anti-president and is just spewing all this negative stuff. It's like, if you're that afraid, just go to cash. They're not ruining your retirement. Just go to cash or capitalize on it by finding something that's inverse. That's true, Lori. When I went to Italy, Lori says some people only know the Dow. When I went to Italy in 2001, it was a really interesting experience because at that point, I'm an active trader, right? I really started in 1996, went over to Europe in 2001. For me, the S&P is the market. In order of importance, I would say S&P is number 1, NASDAQ number 2, Dow number 3, and Russell number 4. Maybe even switch Russell and the Dow, just because I think small cap has a lot of relevance. They would always, when they had international news come on about the markets, it was always the Dow. That's all the Dow Jones Industrial Average, and they rarely ever spoke about the NASDAQ and the S&P. So most of the world does know the Dow. Yeah, it's crazy. But as a trader, I think we all agree S&P is it. Mark says, I'll be bullish. Everyone sounds bearish. We talked about that the other day, Mark. It makes me feel that way too. So I'm being very careful with my portfolio. I have not gone into the full-on short mode. I'm long. I added a long position today. Well, I shorted sold puts on SMCI today. Got 3% for the week, or I get 3% for the week. I sold the $30. Yeah, I sold the $30 strikes, and I collected $1.03. So less than 3%. No, over 3%. But we'll talk about that one instead. Mark says, got to pay the government taxes, and I'll be selling puts on Palantir and IBIT, maybe Nvidia. I'm looking more for that as well. I was looking at selling on Nvidia, but we'll talk about Nvidia here again as their day or their week is very good. Now, I don't know if you guys saw the tweets I pushed out there today. I'm trying to tweet more. If you guys have things that you'd like me to tweet about, let me know, and I'll start tweeting more. I'm just so bad at it. I just hate social media. Anyway, the retail sales numbers came out today. I also tweeted out about Nvidia, but we'll talk about that here at the end. So let's talk about retail sales, which, was good. The numbers were good, but they weren't great. So as we know with Forex Factory, they always change their numbers on the day of. It's just bizarre because it was 0.9 or negative 0.9, and the expectations were going to switch to a positive 0.6. Well, they switched it from negative 1.2, and the outcome was a positive 0.2. The good news here for anybody here that's looking at positive market economic sentiment is we are above zero. As you know, anything above zero means that retail sales are growing, and we have to have that to have economic growth. If retail sales continue to stay below zero, our economy is going nowhere. It's going to slow down to a grinding halt. Now, the previous number was appalling for February. Negative 0.9 is what we ended up with for February's number. Last time we had something that bad was 2023. It is kind of interesting. It seems like right around February, it's usually a negative number. It's one way or the other. So we came out at 0.2. That's great. But given what we've seen over the past 8 months or so, going back to last August, we've been above zero every time except February's reading. So not a good thing. Actually, we can even go further. We're going to go all the way back to March of last year. We've been bullish above zero every time. So a 0.2% reading or 0.2 reading is not great, but it is above zero, and that has a lot of people feeling a little bit more comfortable about the retail sales numbers and how that might be as an economic stimulus, although it's not significant. It's not a big mover. Okay, before I dive into my next topic here, I want to go to the questions. You guys have been chatty. Andrea says, I have a portion in bonds, just waiting for that to happen when they then reallocate. Good. Yeah, right? I mean, stay in bonds. Get that consistent income stream payment, right? Go for it. And what will probably happen is if we do get an exodus in capital, meaning people leave the equity markets because they're fearful and they're panicking, the money's going to go somewhere. Part of me says it's going to go to crypto. Part of me says it's going to go to commodities like gold and silver, which, by the way, I did buy 20 ounces of silver over the weekend. Physical silver. About 2 10-ounce gold bars of silver at Costco this weekend. I don't know, impulse purchase there, but adding to my physical metals collection, I did buy 2 10-ounce bars of silver. I can show them. They're downstairs, but maybe I'll show them to you tomorrow. But yeah, you could, if you are in bonds and the money does flow into bonds, remember, demand for bonds drops yield. So the more people that want those bonds, the lower that yield goes. So you've locked into bonds right now. If demand surges for those, you're in a good spot. You can actually sell those bonds for a premium because it pays the higher interest rate should you choose to at a later date. So that's a great position to be in, would be in bond markets if you're fearful. And maybe I should do a show tomorrow on, how to position yourself for a bear market, or maybe sometime this week if I have time to prepare. But we're in that, we're right at looking over that cliff, right? It feels like we're just right there. Like, do we actually go, or do we get a little bear trap here, which pops back to the upside here? I did not buy a rotisserie chicken. I did not. You guys are. We've got Costco fanatics. Where do I store the silver? Andres, I am not going to tell you that. I'm not going to tell you where I keep my physical metals. Come on, man. No way am I going to start telling people, yeah, it's in my nightstand. It's just break into my house and find it. Of course, I would not tell you where my private keys for my crypto are or my physical metals, but I like the effort, like the attempt. That was good. Problem will be, we'll get in 50% of those funds at 20. I hope you're a bigger drop. Well, look, if we get a big drop here, I'm like the rest of you, I don't think it's going to be a quick thing. I think this will be a slow grind, and I think it's going to be just a reflection of the economic uncertainty. Right now, there's so many unknowns, and that's what's causing it. We also have the rate cuts that are potentially coming, and those odds are shifting more towards rate cuts, which should act as a stimulus. So I could give you a plate full of arguments for markets being bullish. I could give you a plate full of arguments for markets being bearish. That's why I'm not going really aggressive one way or the other. If we do get that bounce up to that S&P level that I've been talking about, I will probably be going directionally long puts with probably 120-day expiration. And we'll see how expensive those are. But my guess is the premium will be declining on these because it's obviously moving to the upside. So I'll buy out of the money. I might even buy right at that 20% mark, right? So if I'm looking at SPY, which is what I'll be, I might do SPX, but we can do SPY here just for fun. If I go to SPY and look at 20% off the high there, that brings me down to, I'll go off the chart here. Let's go all the way down to 20% down. That's going to be 490. So I would, maybe look at going to buy those 490 puts directionally, which would be really cheap. Really, 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 really cheap right now. I'm probably going a little bit higher than that. But, and put that out for the next 120 days, which gives me 4 months for it to decline to those levels. As I mentioned earlier this year, I really thought we would see it sell off in the second and third quarters of this year. I did not think it'd be Q1 and Q2, but here we are. And like I say, markets do what we least expect it to do. So as we get up here, and you notice that today, if you're playing that same level, we actually have that level retrace into. You kind of came into it already here, at least from the level that was broken on the SPY. You had a retracement into that zone today, that zone being between 567 and 571, so really the 4-point range there. And we hit dead center of it and sold off a little bit today. So I still am going by the S&P futures. Let's go there, right, which is a slightly different number. And, of course, this is going to be augmented because of it's a futures product. Mark says, go to pay the government taxes. Okay, we got that one already. Jimmy says, be greedy when others are fearful. Yes. And I think this is where you can do really well, or you could actually get caught in a pretty bad spot. So for Jimmy's point there, be greedy when others are fearful. Clearly people were fearful. And that's why last week I was selling a lot more puts with the expectation of actually owning Nvidia and owning Tesla. I'm okay owning Nvidia and Tesla. Those are, I'm absolutely fine holding those. Heck, I'm even fine holding Amazon and Microsoft at levels that are lower, right? Why not buy it at a discount if I can? Because their numbers are still coming in rather well. Now, on SMCI, which I sold puts on today, this has been a pretty wild ride for SMCI, but I sold the, let me just make sure I have it. I did this with my Schwab account, so this one's going to be, I want to make sure I got the 39s. I'm pretty sure I got the $39 strikes expiring this Friday, but I want to make sure I give you guys the right numbers here. Just so you know what I got, SMCI, yeah, $39 puts, and that was for the 21st. So this one, is fairly risky just because the volatility of SMCI. I think you guys all agree that thing is just wild. And from where we are right now to get down to my $39 strike by Friday, it would have to drop another roughly 6.89%. Easy to do for SMCI. Just look at some of the candles back here. So this one I just did because the premium was so good. I collected, like I say, $1.05 on each contract of that one for a 30 $39 strike. So yeah, roughly 3%, slightly less than 3% for 5 days. I wanted to do it last Friday, but I waited till this morning just to see what the markets would do. But that's the only one I made and opened up this morning. Let's see. Andre says, let's get the likes up there. Yeah, I don't do enough. I don't do enough pandering for likes and subscribes. I know we have some new people here, so if you are new, hit that subscribe button. And I guess you should only pander for likes if people like the show. So maybe people just don't like the show, although they watch. So if you like the show, hit that like button. I appreciate it. What else we got? What's SMCI's daily ATR? Big. I mean, this thing, let's go. I think I have ADR on there. Oh, I switched to the top. Hold on 1 sec. Let me pop that up here for you. Right now, you're looking at $4.33 per day. $4.33. This one is definitely tied. Well, not definitely, but there is a tight correlation between SMCI and Nvidia. So if Nvidia does well, SMCI tends to do rather well. And I do believe that Nvidia is going to have a pretty decent week. Now, if you didn't follow any of my tweets I put out there today, there is the GPU Technology Conference. This is the biggest event that Nvidia puts on. It's one of the most sought-after tech events that you can get. Every ticket is sold out. If you know someone, you might be able to get a ticket to this one. I could probably get a ticket. I do know someone who could get me a ticket, but I watch some of the live streaming events. You can go to their website, which I tweeted out here, so let me post it, and I'll copy it over to chat for you guys in case you would like to check that one out. But you can go and watch all the events. They have them all streaming. And now the main one, the big one, let me see, where is it? There it is. I'll click this. I'm going to copy it over for you guys so you can have it in chat. The main one is going to be tomorrow. I believe tomorrow at 10 a.m. 1 second. Come on. Control-C. Oh, my computers. Yeah, it's actually started yesterday, but I think that's just like basic stuff, opening setup and things like that. Today was the first, I think, official day of it being open. It's a huge event. I mean, I tweeted out that if you want to be kind of at the forefront of what AI can do, its capabilities, how it works, all that stuff, you should just take the week off and watch all these presentations. I wish I could have taken the whole week off or gone to this event just because it's so great. No, I haven't read what my shirt says. It's an old Irish bar in Dublin that I went to. So yeah, you can go here. You can just register for free. There are all kinds of presentations, everything to do with AI. But tomorrow is the keynote. So I'll click on here. Hopefully I think it might bring it up. I'll go here to the agenda and yeah, well, I'll leave it for you guys. But tomorrow is the main one by Jensen Huang. I believe that's at 10 a.m. Unfortunately, well, I have a crypto class that morning, so I won't be able to watch it live, which is unfortunate, but I would encourage you guys to watch that one. He always shows some pretty cool things, some new technology, and last year I thought there was a lot to do with robotics. I'm very curious to see the year-over-year improvement in the technology that they were displaying. Because a lot of their robots last year were, people in the back room with remote controls, driving these robots around and things like that. Do we now get the announcement that this robot is fully autonomous? So Sava, tomorrow is where Jensen Huang, the keynote, or the owner, the CEO of Nvidia, this guy right here, will be hopefully giving us some presents, some good news, some updates, something that will be a big shock factor. And like I said, I have some friends that work in the industry, and they're saying, expect some really big announcements over the next couple of days from Nvidia. And I'm like, okay. So for that reason, I sold puts on Friday. I sold the 112s on Nvidia, which I hope I get executed at 112. And, I don't think we'll see a big sell-off. I think Nvidia is going to create waves this week by showing what the future can hold. Sale announced a Bitcoin purchase on it. Yeah, was it 10 million or something? Yep, need to buy a little bit. I know they offer free classes on Nvidia. I'm taking one. Yeah, great. There's a whole bunch of free training on Nvidia. Go to their websites. There's all kinds of cool stuff. This is for the GTC conference, but if you go to their website, they do have all kinds of training. And, as time goes on, Nvidia, I think, is going to entrench themselves more and more, not just on the hardware side, but software as well. And if you're familiar with their technology and how to implement it, I think it could be a pretty good thing. All right. Bought some Marvell. So you immediately did cover calls on your position? Let's check out Marvell. I know I'm jumping around today. MRVL. So our Marvell has been beaten down. We talked about this a while back. a pretty risky play, although you're kind of in an area. I thought we were going to stop. Yeah, we had this demand zone drawn out between, let me get that one mapped out for you. It looks like $70 and 72, almost 73 bucks. We're now below that one. So that's not a great thing, although the good news is, just like the market has over the past, or like Bitcoin has the last few days, it's based a little bit. Feel like I may have found a footing. So that's what I would have done too. If I bought $84, oh, you're sold out of the money. Okay. For situations where I think the market might sell off a little bit, sometimes I'll buy something outright and I'll sell calls at that price and try to get that, 3, 4, 5% for the week, even though I believe it's going to sell off for the next few days. But not bad. So you're kind of hoping that SMH rallies, right? You want to get semiconductors to rally, and that's what's been. Semiconductors having a really nice rally over the past 5 sessions. Marvell, not so much, but you're probably all right. 84, could get there. Usually looking for that gap closure. All right, so that was the big piece. There was the Jensen Huang presentation. Again, there's a whole schedule and calendar. There are some other big names speaking, but Jensen's tomorrow will be the most important piece. There are, like I say, dozens of different things about AI and AI models. The ones I really want to learn more about is the customization of large language models, because I'm curious about creating a trading AI. It's outside my area of expertise, but it has occurred to me that I can take every piece of trading knowledge, take all the books and Martin Pring's and all the Steve Nissen's candlesticks, all the strategy books from the prominent guys and all that stuff, and then see what AI comes up with. Maybe I have put a portfolio into a model. Now, here's the thing. If I do go out and create an AI model, which I'm not saying I am, I'm interested. I'm very interested in. But if I can create an AI model, I certainly would not be buying any of these other ones. Because right now, at least on my feed, it's popping up everywhere. Oh, AI trading. I don't know if it's happening on yours, but it seems like everyone's trying to sell me some AI trading system. I would never buy any one of those. I would never give 1 cent to any of them. I am kind of curious, though, to see how it would read a market, and especially with these large language models that you can download, right? I can use Meta's large language model and customize it to fit my needs. Just curious what the results would be, right? Can it beat me? Like if I set up a head-to-head test, which is really be my main interest, I would set up, a $100,000 account for the AI, $100,000 account for myself, and then trade and just see the results of it. Of course, monitoring and staying on top of it. But I'm just curious because I don't believe that these AI models are going to beat you. I think if you trade correctly, you'll be able to beat AI. Making me algorithm trading model. Exactly, Sava. Thinking about it. Not quite sure if I'll do it, but I definitely need more knowledge in the subject matter, and I think I find it very interesting, as I think some of you do as well. The prospects of having an AI system where you click a button and it does nothing but trade for you and makes you money, and you can just kind of do what you want. That's a pretty interesting prospect. And I'm not the type of person that's looking for, I gotta have 6-7 figure returns per day. If you can find a system that I can turn on that'll make me $500 a day, then great. Just let that thing run and I don't do a darn thing. Perfect. Let that be my co-pilot to make all the trades for me. Let it happen. Let's see if it happens. I'll keep you abreast of what I decide to do. I'm going to watch all these Nvidia conference videos and training stuff and see what their large language models do, and talk to my friends there and see how they may be able to help me train it and build it and come up with my own little trading system, which would be interesting. Curious how it all would work out. All right, let me run through. You guys can hear my throat is totally struggling right now. So let me go back to our markets and run through our top 8 just to see where we stand. Hello, Rita. Happy St. Patrick's Day. Oh, yes. So to the shirt, it's called the Quays. So Temple Bar is a location. I don't know if you can't see it. So Temple Bar is a location. I always thought Temple Bar was a little bar, but Temple Bar is just a little tourist trap area in Dublin. It's fun, there's music playing all the time and just tons and tons of bars. So a great little place to go hang out. And then the Quays was one that I liked. I went there and listened to a bunch of music. So that was my Irish. There you go. That was my Irish experience. If this system makes $500 a day, it can make $5,000 a day. Count me. Yeah, but I don't want to be greedy, JB. I'd rather get a system up and running that is extremely consistent and can generate small numbers. Once that's proven and done, then yeah, you put in more capital and see if you can get it to go. But I don't have any, I don't need to be having a system that makes millions of dollars a day. I think that that's unnecessary. Yeah, Temple Bar, lots of old bars, but again, very touristy, incredibly touristy. And my favorite part was Kilkenny and Killarney. Those are my two favorite spots in Ireland. Kilkenny in particular, because there's a beer called Kilkenny, which I really like, and it just felt very quaint and nice little town. Okay, let me run through our top 8 here, and then you guys send in any questions here, and I will be happy to answer them to the best of my ability. Starting off with our 10-year. So right now, again, my expectation is you're going to see these yields rally up a little bit, get back up to that 4.4% mark as we have these yellow bars on your screen mapping it all out, kind of creating guardrails for you of price. And then I do think you'll start to see those yields drift lower. We've talked about this in the past where the belief was that yields are going to go higher because you have fewer people buying government bonds. You have more government bonds being issued, so you got lower demand, higher supply. That means your yields have to be much higher to get people to buy those bonds. However, when you have the president and your secretary of the Treasury both saying they want lower yields and they're going to push those yields lower, I would believe that that was more likely to happen. So even though my gut says we're going way higher, I can't go against the people pushing it down. They're way more powerful than I'll ever be. So I do think you're going to see these yields stair step down lower and lower and lower, and that'll act as a catalyst in their minds for economic growth, which it will. Now it's just a pullback phase in that 10-year at 4.29%, slightly down on the day, but I do think your high point here will be getting up to about 4.4% if we even get there. Otherwise, I see us trickling lower just because of what the market's. Oh, well, I pronounced my shirt wrong. It was the frog in my throat that got it. I did Quays. Well, it's got a Q in there, right? When it's a Q, I've always got to pronounce it Quays, but it's a keys. Okay. They played a lot of string music, so they should call it the strings. Your dollar index was also down 0.32%. This is one that just fell off a cliff the other day. This is the same reason here. If you take out the new administration and Secretary of the Treasury, I'm bullish on the dollar. However, when Scott Bessent is known being very big advocate for a weak dollar, and the president knowing that a weak dollar would stimulate economic growth, I'm not betting against those two either. So I think that could, as Chio says here, manipulate markets. Sure, absolutely. You create policy that influences. Manipulation is a strong word. We'll just say influence, right? We'll put a little influence on it. And their interest is that this dollar goes lower and lower and lower. So like David Warner would say, you look for that whole number psychology. If you look at the 104 strike on the dollar index, let me bring that up here. I'm just going to put this at 104 even, style coordinates. 104. Notice that over the past couple of days, we came right back up to 104, hit it a few times, and that may be all it's needed to prove that it's not going to break 104. If that's the case, then I think you kind of map out that same sort of stair-step system and look at 103 as being your next logical target for that dollar index, which is not much lower than where we're at. We're at 103.40 right now, so that would be my next logical target for this one, which is actually at the beginning of a rally-based rally demand zone from October 11th of last year. So downside for the dollar continuing. You had Bitcoin, which this number is misleading. It says 0.27% down. That's, again, because of it doesn't count the weekends. It's counting them as one. The spot market actually would show you a different looking chart here. Today, if we go to the spot market for Bitcoin, it actually looked fairly decent. Right, your 1.66% move up because yesterday, Sunday, was a pretty big down day. We came right back up to that 85,000 mark. And here's something interesting for those of you guys to pay attention to. Apparently, there is a gentleman out there who no one knows the actual person, but you can see his handle because all of crypto is tracked. He started off with a $350,000 short position on Bitcoin, leveraged 40 to 1, right? So it's not 350,000, 350 million, excuse me. $350 million position short on Bitcoin using 40 to 1 leverage. He has since increased that multiple times, and now it's sitting at $500 million, $500 million short position, and the liquidation price is $86,000. Now, why is that important? Because you'll notice where $86,000 is. I'm going to put a blue line on here that's $86,000. Because these systems are transparent, the industry can see where these positions lie and where this individual's stop point is. So there's all this chatter now that the people here who are holding Bitcoin are trying to coordinate a rally to buy this and push the price of Bitcoin up above 86,000, which would force liquidate this person. Now, if you have a 40x short position that gets liquidated, that could cause a huge amount of buy power if that short gets liquidated. And that could cause a nice big pop up here in Bitcoin. So keep your eye over this $86,000 level over the past couple days. Apparently, he's already down pretty big because of what happened today. But yeah, flush it out. Could be pretty interesting to see what ultimately happens with this one. But yeah, 86,000 apparently is the liquidation price for this trader who's got a monstrous position. I mean, look, I've had a couple $1 million positions leveraged on Bitcoin just playing around, but to go 500 million, that's some cojones. Is there an expiration on it? No, those are perpetual futures. So they're called perps. No expiration date on them. But we do know that 86,000 is that point because he's leveraged so much. If it gets above 86, whoever issued that leverage will automatically, electronically shut it out and close that position instantly. Going to be pretty bad. Could this be to liquidate his huge long position? No, it'd be liquidate his short position. Correct. Kind of like a short squeeze of the max. It could be. And this is way different than trading stocks, because with stocks, you don't know who's short what. For example, let's say that Steve here opens up a $500 million short position on Nvidia, and he's using Goldman Sachs. The only people that are going to know that are Goldman Sachs and Steve. Whereas with crypto, everybody knows. If you know how to read the data, because it's a blockchain that's open to everyone, it's all transparent. So really interesting seeing how this all is transparent and people can see what's going on. What it does, though, is it does lead me to believe that the ability to manipulate these markets is colossal. I'll give you an example. Let's say that I had, I'll just say $10 million, right? If I had a $10 million account, I could take $3 million of that, use a 50 to 1 leverage futures product. That now gives me $150 million that I can play with, right? If I go into 3 million, I get 50 to 1, I can now have $150 million to play with. So I start with my 10 million. I take 3 of it over here to a leveraged exchange where I can now use 50 to 1 leverage. I have 7 million left over here. So what I'll do is I go and I do a big short position, 50 to 1 leverage. The whole world can see it. And then I take that other $7 million of the Bitcoin. Maybe I've accumulated already, and I just dump 7 million all at once. One button, boom, just to create panic. And when that happens, it triggers all kinds of selling out there. That person closes out their short. So if you have big money, you could make huge profits on Bitcoin or other cryptocurrencies through market manipulation. I think it's really easy to do, but you got to have, I think if you're at the 50 to 100 million mark, you could really start to play games. That's why when we have these big swings, I don't worry about it, because I know that the long-term trajectory will be up. These fluctuations in price will happen all the time. So something to keep an eye on. See it on Saturday. What with the buy-in, or let's see. What would the volume look like on the short squeeze if it's successful? Well, it really depends on where it would be. So you remember when you look here, like this is, you can see at the top of my screen here, it says Bitcoin US dollar, and then this is a one-day chart, and this says Bitstamp. So this is coming from Bitstamp's exchange. So this is only going to show you the volume on Bitstamp. So if I wanted to go to, it really depends on where here's Coinbase, right? So here's Coinbase's volume. Every exchange has its own volume. So it really depends on where this is happening, right? Does it happen at Coinbase, at Kraken, at Gemini, at Binance? My guess is you would go to an exchange that isn't the most liquid, like maybe you go to Kraken or something like that, and you dump 7 million all at once. Because they're an illiquid exchange, it has a much more pronounced effect. Now, because they're all fragmented, how do you get the whole system to move? Well, what happens is if one exchange gets seriously out of balance, you have arbitrage bots. There's algorithms that will immediately start buying from Kraken, the one that gets crushed, and try to sell it on the other exchanges. And that brings down the price of the other exchanges and drives the price of Kraken up. So you do have some systems in place, these algorithms, that will help absorb some of that crash. But if it triggers a sell-off, so for example, let's say I cause the price over at Kraken to drop 4 or 5%, snap of the fingers because of my $7 million Bitcoin sale. if that hits the news wire and people are like, oh crap, markets are tanking, somebody's unloading Bitcoin, that could cause a trigger effect, which precipitates more sell-off. And of course, if you're that seller, you're going to be out there promoting that news as well. Like, whoa, man, somebody knows something. He's unloading Bitcoin. You guys get out, get out, get out. And you manifest that fear, which is why I don't acknowledge any industry experts on cryptocurrencies when they're pumping and dumping it and saying buy it, sell it. To me, it's all about the long term. Let's see. If you have time, yeah, I'll get to volume. I don't really use VOD. Market manipulation is a problem. It's a huge problem. And that's why you got to like not get so sensitive to the small fluctuations of Bitcoin. Whatever it is, friend was telling me about it. Not sure. Sava says, don't know Hyperliquid. There's Hyperliquid, Hyperledger. There's all kinds of different platforms. I don't know that one, Sava. Merlin, don't you think it would be a good idea to have all the exchanges linked so price is universal all the time? Yeah, sure. But let's be fair here, Steve. I would say let's start with our current systems of monetary transaction. Don't you think, I know the answer everyone's going to put in, but don't you think that the price of the US dollar should be the exact same at Wells Fargo, Bank of America, JP Morgan, BlackRock, Citibank, Deutsche Bank? Don't you think that dollar should be the same price at all of them? It's not. It's different on every single brokerage firm on the planet. They're never going to be exactly the same. It's because they're all disconnected. Now, if I go to buy a share of Apple stock and I buy that from, I don't know, I'm in Hamburg, Germany, or I'm in Bangkok, Thailand, or I'm in Chicago, if I buy a share of Apple, it's all the same price because it comes from a centralized market. So I don't disagree with you. I think it should be, but that's how these businesses make money. They make money off the arbitrage. So they have their own quoted prices. It benefits them in two ways. Number one is they can manipulate client numbers. So if you're trading Forex, spot Forex, for example, the firm that you're trading with can slip you on prices and no one's going to be the wiser. So you go to do a market buy, they see the market buy and they go, oh, prices jumped a little bit right as you hit that button and you paid a higher price. Same thing when you go to sell. You go to sell and they've got their buy price listed. Oh, sorry, it slipped. Oh, I don't know what happened. Oh, sorry about that. You just sold it at a discount. Institutions have that ability to manipulate prices, and because it's not centralized, as long as they don't get too egregious, they're not going to get caught. This is day-to-day activity. So if you're a business, you don't want to centralize. You want to keep everything on your own book and trade against that book. But yes, I agree with you. I absolutely think that the currency market should be connected. I think that the crypto market should be connected. You know, if you go around Europe and you go exchange money, all those little money kiosks, exchange here, you'll never get the same rate anywhere. And sometimes they are 5, 10, 15% different depending on which kiosk you go to. That's how they make their money. So that's why we got to know when you travel, kind of what's the best way to make those trades or get your money. Same thing in trading. So good point. Aga, what'd you say? Yeah, I don't do spot Forex anymore. I have account. I actually should just move my money out because I actually do more futures. I'll do futures when I want to trade Forex just because that's centralized. Adam says, I finally got my first payout from a prop firm. I just wanted to thank you. Oh, no problem. Glad it worked out for you. Absolutely. August says the manipulation is so real in Bitcoin. In all cryptos, especially the smaller stuff. So, Bitcoin's the big leader with volume. But if you look out here and you've got Solana and I see Cardano, a lot of these can be easily manipulated by the exchanges that you're trading on, which is why, part of the crypto program that I teach at Trading Academy is understanding the right way to buy, the right way to sell, how you should put your orders in to prevent slippage. I mean, if you use the retail platforms, you're paying anywhere between 2% and 6% more just to use their basic platforms. It's crazy. It blows my mind every single time. What did Big M say? What's going on there, Big M? European equities have done well the last few months. Oh, you're talking about buying in the U.S. Yeah, ours have struggled. A lot of international markets have done really well. Unfortunately, I don't really talk about them too much here. I don't know why. It's been one of those things that others have asked. I have the DAX on here. Here's your German exchange, which has been looking really good. Although I would argue that you have some change afoot. The last couple months seem to be really volatile. Of course, that coincides with our new president. But that's Germany. I've got the Nikkei in here. So the Nikkei has always been wonky and never really follows any market. Here's your Hang Seng, which has been phenomenal. I mean, China just smoking to the upside, ripping here. It's been crazy. And for those of you that want, you can go into different ETFs like FXI, go play those markets by using ETFs. There are ETFs out there that represent those various markets. So yes, you certainly could be playing international markets, and a lot of them are looking pretty good right now. US, if you go, here's FXI. If you put that over with SPY, we've had a big sell-off. The question for me is, does this big sell-off in equities here in the United States, is that going to happen to the foreign markets as well? Because if we start to play this chokehold chess game with tariffs and trade war, ultimately it will hurt those markets much more than us. Much more than us. Chris says, no trading academy center in Europe? Not yet. Not yet. I would love to go visit Hamburg again. I've been there. I went to Klosthalle in Hamburg, and I saw, actually, my favorite band, Fish, played there. 1998 was last time I was in Hamburg. Yeah. When I come out to Germany, Chris, I'll let you know. I was in Europe a couple years back for Oktoberfest and went to Berlin as well. I was born in Munich, but my German is embarrassingly bad. Embarrassingly bad. Okay, big F's to buy the companies outright. There you go. You're better than me because I just don't have the time to research all the international companies, but you probably know them a lot better than I do. All right, we weren't even close to getting to the top of the list. I thought, again, maybe we had the half-hour show, but as we know, that's never going to happen. Here's your gold chart. So gold today, again, all-time closing high for gold. We closed today at $3,006. That's impressive feat there. Judging by the candle we had on Friday's session, I was really expecting this to be a sell-off kind of day. Didn't happen at all. And again, this is why you wait for confirmation. I had said on Friday's show that if we get, I think I said that, if we get down below 29.88, that's your shorting opportunity, and it never happened. So there we go, looking strong. Only 0.17% gain there for gold. Crude oil had a little bit of a bounce, but I just don't see a lot of strength here. You have a little shooting star pattern formed today. Probability is higher. We're going to see a down move tomorrow in that crude oil chart, so keep your eye on that one for those of you who are trading crude oil futures. You have the NASDAQ 100, which has its second green day in a row. So we can go and celebrate our green day, the second one in a row there for the NASDAQ. It was up 0.61%, and I'll show you the Magnificent 7 here just so we can kind of show you the status there. When we run through that Magnificent 7, Tesla bringing it down. I did not sell puts on Tesla yet. I may as we get near the tail end of the week. I kind of want to see how this week pans out because there's more discussion about the Tesla vandalisms and the impact it might have for Tesla. It's just really uncertain, but I'd be comfortable going back to the 210s again as I did last week and see if. But I think I might wait a little bit later to make that trade, and I'll let you know when I do. Nvidia now 1.7%, closing at 119. Again, I have the. Oh, that was from last week. I have the 112s right now, which I'm totally fine with. No real rhyme or reason. It was premium based. I really wanted to get the 108s, but the premium didn't meet my number, so I decided to go with the 112s because it did meet my premium. Amazon was down 1.1%, and it really hasn't done much. Amazon's 5 days in a row kind of stuck here at the bottom of this. Yes, it's trickled up, but it's not showing a lot of strength. And you notice by the red candles on Amazon, it tries to rally, but then has big red candles. That tells me that this is actually rather bearish on Amazon, and I probably would not look to buy this one right now. Yeah, Hunter says, no, German wants to buy a Tesla. It's funny, the European ads are making Elon Musk out to be this total Nazi, which is kind of funny. If you research him a bit, you understand he's trying to do good, but he's getting caught up in a lot of bad stuff, but whatever. Google down 0.63%. This looks worse than the Amazon chart because it's barely eking gains. Meta down 0.4% of the day. And again, all these Magnificent 7s looking somewhat unhealthy. There's your Microsoft, was just pretty much unchanged on the day, 0.04% up. And then finally Apple at 0.24%. Second day for green as well for Apple. But boy, this is one of those ones where you have to ask yourself, do I feel comfortable buying at a discount? I mean, off its peak that we had just from back in December to where we are right now, Apple's down 17%. I mean, that's a good buying opportunity for a lot of people. Not me, because I can't never buy Apple ever again, but for some of you, that might be a good opportunity. All right, that was your Magnificent 7, or your your bronze medal winner. Here is your silver medal winner, which is the S&P. We already talked about this one, up 0.71% on the day. Looking good. I do think you'll see a little bit of a move up tomorrow, getting us into that overhead supply, maybe by tomorrow or some point this week. And then the real decision is, how do we react to that overhead supply? So 0.71 for the S&P, closing at 5680. And then there's the Russell, your leader today. Woohoo! Up 1.21%. As was pointed out earlier, this thing's down. It was down 20%. It actually was down. Let me get the exact bottom here. 19.85. Let me make sure I have the tops and bottoms picked there exactly. Yep. 19.85% was its peak to trough. So not quite bear market status, but close enough for government work. All in all, a really nice rally over the past couple days off those lows we saw from last Thursday, up 4.2% over the last 3 trading sessions, 1.21% today. So again, the picture for me that these index paint is one of relief, one of pause, like, okay, take a breather. Are we going to bounce to the upside and see more upside movement? I think you'll get a little trickle of that to the upside. Now, as far as announcements, retail sales was your biggie, but then it jumps into a lot of central banks. Now, tomorrow, the only real announcement from a central bank perspective is the Bank of Japan. That's tentative, so there isn't a real time. They're right now at less than 50 basis points is where they're at. Expectations are they're going to stay the same, but remember, Japan has been raising. On other news, if you're trading the CAD, the Canadian dollar, you've got CPI numbers coming out. That's an hour before the markets open. You also have, for the U.S., building permits, housing starts, import prices, capacity utilization rate, and industrial production. So a lot of, I'll call them second-tier numbers coming out for the United States. And I'm particularly interested in the building permits and housing starts. These are signs of economic growth. And you can see that we've been doing well for the past 8 months or so with building permits, more people getting permits. They're expecting a slight pull down this one. And also on housing starts, we've kind of been just chopping sideways for the past year or two. Let's see if we can get some real direction there and show some either economic optimism or pessimism. And let's see. That was it from the economic side. Let me real quickly show you the earnings calendar because we do have earnings for tomorrow. I just don't have it all set up and ready for you guys, which means I'll take a full hour for the show today. Crazy. All right, here's your economic calendar for tomorrow. We have, by market cap, you got XPEV, which is XPeng, another EV company out of China. You've got Tencent Media. That's really it. There's really nothing big here. A lot of really tiny companies, so nothing big. Some of the bigger ones could show up later in the week. All right, Big Eb says Intel might be turning a corner. Yeah, it does feel that way. I don't know why my computer's frozen. This is wonderful. Let's go INTC. Bring that one up for you. INTC. Yeah, it's been looking real good lately. We had that huge swing back here early on when they were talking about breaking the company up, which could be very beneficial. You've heard a lot of talk about Intel working with Taiwan Semiconductor, Nvidia plants, just a lot of optimism. And yeah, I do think this thing has turned the corner. I don't know if it's turned the corner as a company, but at least the prospects for you as a shareholder, I think, are much better. We had this really abnormal spike from February 10th all the way through February 18th, and all of a sudden we've jumped up even more. So it looks good to me. I mentioned this a while back. I said if there's one of these semiconductor or chips companies that I'd like to own, it'd be Intel because they just have so much infrastructure, they got so much capital, and they were one of the big beneficiaries underneath the CHIPS Act under President Biden. Now that money's already been given to them, I believe, so now that Trump wants to take that away, you can take away the act, but the funds are still there. I don't know whether there'll be a repayment option or choice, but I think Trump's smart enough to know, okay, we've given them the money, now let's build out the infrastructure and start getting all these chip manufacturers in the United States. I think that's definitely a win for Intel. So, yep, definitely bullish on Intel going forward. Let's see. I got to roll too, JB. Slancha. There you go. I wish I had a nice green beer for you to show that one. With Nvidia and Taiwan Semiconductor tapped out on capacity, the new CEO might be able to make things happen. And that's been the talk track. Big Eb has been that they're going to use Intel's facilities, make some modifications, modify some things, but now start using those plants. Why not? And you're creating legacy products, create something that's new, mainstream, that everybody wants. So there we go. Puts on Elon Musk, surrender? No, I think Elon Musk don't care. How can you take it away? Plant is half done. Yeah, I don't think he's going to take it away. But, he's taking away the CHIPS Act, right? He wants to remove that whole thing. But, well, what does that mean? I don't know. I can't imagine you'd be like, okay, give us that money back. But I would think that if the money hasn't been doled out yet, then that might stop. But if the money's already been given, I think that they're in a good place. The smart thing to be to use them, right? To say, okay, we've given you this money. Now let's work some deals with Taiwan Semiconductor, Nvidia, other chip manufacturers to just bring the best quality chips so we don't have to rely on TSM from Taiwan. We can rely domestically. Okay, so that's it for me, everybody. I didn't want to do an hour show, but here we are. Happy St. Patrick's Day. I hope you had are you going to go do something fun? I am not going to do anything fun. I'm going to go cook a corned beef and cabbage and relax and hopefully get my cough and throat back up to normal. Been a week. I hope to get back so I can shout even longer and teach more classes. But thank you guys so much. If you have anything that you want to discuss on tomorrow's show, you can email me, tradermerlin@gmail.com. If you guys are new, we got some new people out here. Hit that subscribe button. If you like the show, hit the like button. That said, I will see everybody tomorrow. Take care.